Tanner Realty Group, and today we are going to look at buying a home in today's shifting real estate market. I have a PowerPoint to go through with you guys today, and then we're going to also talk about what the market looks like today in Clark County and just kind of what's going on in general in the world of real estate. So let me pull up our slides for today. So like I mentioned, my name is Austin Cassidy. It's great that you're watching because that means that you're ready to take the first steps towards home ownership. Whether you already own a home, you're looking to buy your first home, maybe an investment property, you may be able to learn something from today's presentation. If you have any questions during the presentation, feel free to put them in the chat. Also, feel free to reach out to us anytime. What we plan to cover today is number one, the fears versus facts about buying a home, the realities of our market today, the 6 simple steps to home ownership, what financing looks like in real estate, and then what your next steps are. So let's jump right in and let's discuss some misconceptions about buying a home. Number one misconception is I cannot afford a home right now. Well, until you do the math, meet with a lender, you don't really know what you can or can't afford. I've worked with many clients who say they're not able to get pre-approved and come to find out they get pre-approved to even more than they think they would be able to. And that doesn't necessarily mean that it's going to fit within your monthly budget that you have planned out. But if you're paying rent, you may be able to buy a home. Instead of paying someone else's mortgage, you can start building equity yourself. Number 2 here, I should wait until the market gets better. Well, there's never a bad time to buy the right home. There's a common saying, don't wait to buy real estate and wait. And this is kind of the idea that you build equity through your home and you can't always just time the market. My job is to help you find a good buy and ensure that you have the financial ability to hold on to it long term. And every market has an opportunity. It may just be a little bit harder to find. Number 3, I don't have the money for a down payment. Well, there's a variety of down payment options available to you through lenders. There's some programs where you're able to get in for as little as 3%, even some programs in Washington where you can get in at 0%. The myth of the 20% down payment isn't true anymore. So thinking you have to wait to save up for a down payment may actually cost you money due to delaying the financial benefits of home ownership. Number 4 here, I can't afford to buy my dream home. Well, a lot of people can't. And the best way to get closer to buying your dream home is buying your first home, second home, starting to build your equity through real estate and using your first home as a forced savings plan for your future dream home. You'll be able to get to that dream home a lot faster. And sometimes just the fear of committing as well can really put you back in terms of the financial gain home ownership can give you. So let's talk about why buy now. Home ownership may be the best accidental investment someone makes in their lifetime, and with a little knowledge of investments could be the best intentional investment you make. And my job is to help you understand the factors that make this from an accidental investment to an intentional investment. Into more details on this throughout this session. Well, number 1, why buy now? Well, mortgage rates historically are still relatively low at between 5 and 6%. Yes, homes are priced higher than they were when interest rates used to be at, let's say, 18% back in 1981, but also income's a little higher. So you just have to look at the affordability, see what your budget can provide, and look at the financial gain you can get through buying real estate and what type of equity buildup you can get. There's no guarantee. Oh, I'm sorry about that. There's no guarantee that rates are going to stay this way because they can always change. They can go up, they can go down. But by locking in it now, if it goes down, you can refinance. If it goes up and prices continue to go up, well, you're kind of out of luck there. So also, let's talk about the long-term investment. I've mentioned that multiple times. And equity is the value of your home, which can grow every year. Doesn't necessarily have to go up every year. And over a long period of time, history has shown that homes appreciate. So this diagram here on the left shows how over the span of 30 years, equity in a home can increase from even 15,000 all the way to 408,000. And this happens with equity buildup, which is a combination of appreciation, debt pay down, and debt pay down. Your home's value can increase, and this is what you call the appreciation. Also, home ownership gives you stability and security in where you're going to live. You get the pride of home ownership in that. You have a sense of community with those around you. The freedom to customize your home. If you're renting, sometimes you can't even paint your walls. Let's add a little flair to these homes. Also, you get tax benefits and the potential for wealth building. There's also reasons not to buy, though. And the first reason is if you're changing a job soon. This may affect your ability to get a loan if you're planning to get a job or change jobs when searching for a house. So make sure that if you're planning on changing jobs, moving out of the area here in really short notice or in a short amount of time, it may not be the best to buy a home right now. Also, if your credit score or down payment savings need work, it's okay. There's no shame in where you're at now, because there's always steps you can take to get to that point of being a homeowner. So sitting and sulking in your shame doesn't get you any closer to your goal of buying a home. Also, some markets may just be too expensive for you at this time. So your focus can be on increasing income and increasing or decreasing your debt to income ratio. You don't want to get into a house that is too expensive for you and become what we call house poor, where a majority of your income is going towards just housing and you're not able to enjoy life. We want to enjoy life here. And the last one here is short-term ownership. It doesn't give you enough time to build up equity in the home, and you can't get appreciation similar to the changing jobs. So let's talk about the realities of our market here in Clark County. The average home price is right about $606,000, which is still relatively high compared to before the COVID-19 pandemic. Days on market have increased dramatically, though. They've almost doubled to 62 days on. Our inventory is still very low, though, at 2.4 months of inventory. What that means for you as the buyer is that there's not as many homes on the market for you to look at and potentially put an offer on. That is why we still consider it a seller's market, because of the inventory. However, with the rising interest rates, buyers have began to get some negotiating power within the negotiations between buyer and seller in their favor, because it's harder for sellers to dip into the buyer pool. The buyer pool has shrunk drastically because of those interest rate increases. Now let's talk about the 6 easy steps to home ownership. And these are the 6 steps here. We're going to go through them one by one and talk about them. So here we go. Number 1 is finding and hiring your agent. That's me. And you won't make sure you want to interview multiple agents. And here's to you if you decide for me to be your buyer's agent. I promise to educate you about the market, analyze your wants and needs through a consultation so that I'm showing you homes that you want and need, not just random homes. I'll steer you to homes that fit your criteria, coordinate the work of other professionals before, during, and after the transaction. I'll negotiate on your behalf and solve any problems that may arise during the transaction. So once we sit down, have this consultation, we're going to do what's called a buyer's representation agreement. This is no cost to you as the buyer, but what it does is it sets mutual expectations in writing, commits me to finding the perfect home for you, and confirms exclusivity between the both of us, saying that we are going to work together to find you this next home. And like I said, this is no cost to the buyer. It's just a document we need done. Step number 2, once you've found your agent, is to secure pre-approved financing. So there's a difference between pre-approval and pre-qualifications. So let's start with what a pre-qualification is, since it's not as strong, and then we'll go to the pre-approval. So a pre-qualification is not a formal or lengthy process. It's really just a conversation. It's not a commitment from the lender. It's a conversation. This is how much money I make. This is about my credit score. And it just gives you a rough estimate of how much you can borrow. It can be great for the starting stages of thinking about buying a home. And when we go to look at homes, we need to have that pre-approval in hand. And I'll tell you why. Well, first, it's a formal application with the lender, a formal commitment from a lender, and it states how much you can borrow and at what rate. And this makes you a stronger buyer in multiple offer situations. And most sellers don't even want buyers in their home that aren't pre-approved yet. So that pre-approval is super important to get even in the door to start looking at homes. So how can you choose a lender? Well, number 1, ask for referrals. I can be a great resource to you to provide you with different lenders in our community, or big national banks. Whoever you bank with may have a mortgage department as well. Excuse me. Number 2, interview all of these and choose the one you feel most comfortable. This is a big transaction. It may be one of the biggest transactions you do in your life. So you want to make sure you're comfortable talking numbers with your lender, and you want to make sure that you feel comfortable that they have your best interest in mind. You prepare a loan application and get pre-approved to them, and then from here, you will determine what to pay and select a loan option, which they'll be able to help walk you through. So let's talk about your monthly mortgage payment. It's comprised of 4 components: principal, interest, taxes, and insurance. So principal, this pays towards your equity on the home. So this is your equity buildup. Interest pays the lender for the loan. Taxes pay the state and the local entities for owning the home. And insurance protects your investment in the long term. And this is what makes up your monthly mortgage payment. So once you have this pre-approval, you kind of know how much you're going to pay. You want to make sure you're maintaining this pre-approval. So no big purchases, no big credits or debits added, no job changes, and make sure you protect that down payment. That's really important. You don't want to get to the closing table and not funds to close on this house you've gone through a month of negotiations on. So step number 3, let's go find your home. This is the fun part. We get to start looking for homes, get in the front door, start evaluating other homes, and then potentially put in an offer on one of these. So when we go to find your home, we need to first define what you're looking for, your needs versus wants. And this is going to be through a consultation with me, either on the phone, through Zoom, in person, whatever fits your schedule best. However, during this time, I'm going to help educate you about the current market, and we're going to refine your search so then we're only looking at properties that fit what you want and what you need. So who's been looking at homes? Well, homes today are all over social media. They're all over the web. People are looking at homes all the time, HGTV, whatever it may be. But when we get into homes, me and you are looking at things. You're looking for the layout, the space, the location to work in different schools, other features and amenities about the house. And I, as your agent, am looking for something completely different. I look at how the home compares in terms of size, layout, and value to the other homes in the area to make sure it's priced correctly. The potential resale value in maybe 7 to 10 years, just so then we make sure that this is a good investment for you. And also big ticket items such as roof, HVAC, maintenance, any structural concerns, anything that I've seen from my experience that raised a red flag, and I'll point those out to you. So we find the home that you love and you want to put in an offer. Well, great, help you with that. By filling out some forms, I send an offer to your inbox, we sign it, and we negotiate the terms with the buyer and seller. In the offer must reflect the true market value of the home, or potentially. If it's been on for a long time, maybe it needs more work than we think it does, or than we think it's worth, well, then maybe we put in a little lower. Or, hey, this is the perfect home, I want to offer a little bit over. Okay, great. We just want to make sure that it's going to appraise. Also in this offer, the terms are going to be outlined in the offer. And there's 6 basic categories addressing timing and financial considerations, which we can go over at the time of the offer. Also, other contingencies or referred conditions that allow you to opt out of the deal if the home has a problem, like an inspection contingency. So let's get into that, the inspection and repairs. So one of these contingencies, and we put these on most houses, I really don't recommend you waive this contingency. Some people do. I don't recommend it. Usually the inspection period is 7 to 10 days after mutual acceptance of the offer, and the property inspection exposes any structural or hidden issues. By bringing in a professional inspector, you're able to know what's going on with the house you're trying to buy. And if you need to opt out of the contract, then it's written in there of how that can happen through this inspection period. On the inspection though, no house is perfect. So we have to remember not to sweat the small stuff. It's the big things that really matter. Any foundation issues, cracks inside the house or over the windows, water stains. We may just want to figure out what's going on here. Faded or worn shingles, plumbing or electrical issues, mold and termite issues. Even though all of these sound very scary, sometimes it just provokes increased investigation into these issues. And sometimes the seller will, let's say, pay to get it resolved, or it may not be as big of an issue as once thought. So it's just something that's really good to think about, that, well, we want to focus on these major things that affect the value of the home. Step number 6, we're through all the contingencies. We now get to close and be a homeowner. So prior to closing, throughout this process of buying a home, you want to make sure you're keeping yourself mortgage worthy. We talked about that previously by protecting your down payment. Also, making sure you're not bringing or taking on extra credit or have any big debits into your bank account that can't be explained. You want to make sure you're also budgeting for expenses. You'll know about these expenses at the start through a loan estimate from the lender, and let's talk about them now as well. You're going to have your closing costs, which are generally 2% to 3% of the loan amount, including lender and title, the appraisal, all of that. Your earnest money, which is collateral for the contract, which is generally 1% of the purchase price, that does get rolled into your down payment if you do close on the loan. Inspections are anywhere from $300 to $600 to have a professional inspector come in. Any miscellaneous, generally in your escrow account, you'll need to put about 1 year of homeowners insurance into it. And then any reserves for improvements or repairs, sale. You want to make sure you have just a little bit in your back pocket for anything that may arise right after you close. Also, 3 days before closing, we're going to do a final walkthrough of the home. If we've negotiated repairs in the transaction, we want to make sure that the seller did them and they're up to standard. So we'll do this final walkthrough and approve the closing of the home. So when we go to closing, it's going to be at the title or escrow company. And what you're going to need to bring is certified funds, the evidence of insurance, and a valid ID. And once you sign away on the dotted line, you're going to get a settlement statement showing where all the monies in the transaction went, transfer of clean title, the keys to your new home. Actually, in Washington, we have to record with the county before you actually get the keys to your new home. So generally after closing, it'll take a few hours, maybe even the next day, and then you'll get the keys to your home once it's recorded with the county. Once you close though, you want to make sure you're maintaining and protecting your investment. So number 1, make sure you're maintaining your home. Perform routine maintenance on your home systems depending on their age and style. Keep an eye on your homes of leaks, damage, and wear. Fixing small problems early can save you big money later on. So every once in a while, take a peek down in the crawl space. Just keep an eye on things. Keep a file for receipts for your repairs, especially big ticket items like a roof, water heaters, appliances, stuff like that, just so you can make sure you know when you go to resell the home, when those are done and kind of who did them. Make sure they were done by a professional contractor. Number 4, a warranty. Consider a home warranty. These are 1-year plans that can save you big money down the road. If you don't know about home warranties, look them up. They're an incredible option for home buyers. So I just want to go back to what my commitment is to you. My job doesn't stop at the end of the transaction either. I'm here to help you, as I want to be your lifelong real estate agent. That's really what I want to be. And so my commitment to you for now is educate you about the market, analyze your wants, steer you to homes that fit your criteria, coordinate the work of other professionals, negotiate on your behalf, and solve any problems that may arise. And number 7, I just want to be your friend. I want to be your real estate agent, and I want to help you reach all of your real estate goals. So if you're ready to get started, feel free to reach out to me. I'd be more than happy to have a conversation with you and see what we can do to get you into your next home. Thank you so much. I hope you all have a great day, and I will talk